Good morning. Welcome to 3 Minutes on Markets and Money. Let's talk about a market in turmoil. That's right. That was the panic last week. 5 consecutive days of a slide last week. Markets were down a whopping 1.69% for the week. Yes, it was absolutely a bloodbath for investors. Well, at least it felt that way to some degree. But look, markets have done absolutely nothing wrong here. Continuing to come down back here to the 40-day moving average, 50-day moving average. Lots of support right here. Market set to rally a bit this morning. Not surprising. Again, we're moving into options expiration week this Friday. So again, expect to pick up in volatility this week. Look for a bounce this morning. The question will be whether or not this bounce can hold or if it will fade off and we'll get more selling going into Friday, particularly because of options expirations. We begin to kind of roll these out. And the reason options expiration has become much more important is that every sell-off over the course of the last several months has occurred on the week of options expiration. That's this week. Pay attention here. We are on a sell signal currently. Money flows are starting to slow up here a bit. Volume did rise last week because of the selling pressure. Again, as we've seen this repeatedly, when markets sell off, we do get a pickup in volume as more sellers show up than buyers. And again, when markets are going up, buyers really are rare and sellers are even rare at that point. So we're seeing markets rise on much lower levels of volume. That's not a concern as long as markets are rising. But if we do start getting a break of the 50-day moving average, that volume acceleration could certainly lead to a bigger decline. And again, in a year where we've had very, very minor declines in markets, 1% to 3% so far this year, we're likely to see a bigger decline at some point. More and more of the major Wall Street firms now coming out saying, hey, we're a bit worried about a correction going into the end of the year or early next year. Very much in line with what you would expect to happen in any given year, a 10% correction, very likely. The one point here, though, is that if a 1.69% correction was a bloodbath for you last week, you've probably got a little bit too much risk in your portfolio. Might want to use this rally today and tomorrow, whenever it occurs, in order to rebalance some of that risk. Because if a 2% correction bothered you, think about what a 5% correction will feel like. Think about what a 10% correction will feel like. As we said before, it's been so long now since we've had a correction of size that it will feel a whole lot worse than it actually is. 5 and 10% corrections, absolutely normal, actually provide decent buying opportunities to put some capital to work, but it's going to feel terrible to get down here to the 200-day moving average. So pay attention to the risk in your portfolio. That's 3 Minutes on Markets and Money. I'm your host, Lance Roberts. We'll see you back here tomorrow.